How can your wealth go up billions and your income tax stay tiny? Wealth isn't the same as taxable income. Here's the core idea. Most billionaire wealth comes from assets, like stocks or real estate, that rise in value over time. But until you actually sell those assets, those gains are called unrealized. For tax purposes, unrealized gains usually don't count as income. Think of it like this. If your house value jumps by $100,000, you don't pay income tax on that increase unless you sell the house. The same logic applies to stocks, businesses, and other investments. Let's break down the first mechanism: buy and hold. Many billionaires own shares in their companies or other appreciating assets. As those assets go up in value, their net worth skyrockets. But as long as they don't sell, there's no taxable event. No sale, no income tax. This is why someone's wealth can soar, but their reported income for tax purposes stays low. Now, mechanism 2, borrow. Here's where things get interesting. Instead of selling assets and triggering taxes, some ultra-wealthy individuals borrow money using their stocks or real estate as collateral. Loans aren't considered income under US tax law, so the borrowed cash isn't taxed. This lets them access huge sums for spending or investing without selling anything. But it's not risk-free. If asset prices fall, lenders can demand repayment or more collateral. Plus, there's interest to pay. Still, for many, the math works out. They get liquidity without triggering income tax. Mechanism 3, die. In the US, there's a rule called the step-up in basis. When someone dies, their heirs can inherit assets at the current market value, not the original purchase price. This means a lifetime of unrealized gains can often pass to the next generation without ever being taxed as income. Estate tax rules vary by country, but this step-up can dramatically reduce taxes owed on inherited wealth in the US. For real-world context, reporting by outlets like ProPublica discussed certain years where some ultra-wealthy individuals had very low federal income tax relative to their wealth gains. These stories highlight how the system works, not necessarily that anyone broke the law. This is about how the rules work, not a claim of wrongdoing.